Coming Saturday, August 2, we have 3 interesting webinars for you. Morning 10 a.m., we have Smart Income in Retirement. Why Systematic Withdrawal Plan SWP beat traditional interest income. At 11 a.m., we have It's Never Too Late. Special Kodishwari webinar only for women. For all the women out there, please register. At 11 a.m., we also have From FDs to PMS, Smarter Income Strategies that don't compromise growth. Links are in description. Please register today.
When an industry like the IT industry sends out a signal that it is going to reduce jobs, especially in the middle and senior management levels, there is a message for everyone in that cadre. Anyone who is a middle or a senior level person in any company should take notice, because this announcement by an industry leader is probably the first in a series of such steps. It is not new. We have already seen global companies like Microsoft do this. We are going to see a lot of job changes globally in many of the bigger companies. You will see it even in the big 7 companies on the NASDAQ. Why is this happening? Technology is reducing the scope for many jobs. It is taking over activity done by people very, very fast. The rate of takeover of such activity is probably going to be the highest in the next 5 to 10 years. Naturally, the first casualty will be those who supervise that activity. You don't need a supervisor when you're not going to have more people do that job. That's why the middle and the senior level jobs are the first target of companies. This will travel down and reduce the number of jobs even at the junior level, but companies will choose to do this later. Now, what should you do in your personal finance when you're seeing something like this all around you? I don't mean to scare people by saying that this is going to happen to you, but there's no harm in ensuring that your personal finance is in a state of readiness in the event of a job loss. I have this interesting experience with a friend who has changed jobs 4 times in the last 7 years, and it's all in the middle to senior level jobs. So he was in the middle level and then he's gone to the senior level. 4 job changes. Every time he sees a job change, that is when he loses a job, he tells me that I don't think I'll find another job. He does find one after a few months. So it's not been a hopeless situation or a scary situation. It's just that there is a phase of uncertainty that comes into his life once in every 2 years. Now, this is going to be the order of the day, especially for those in the middle and the senior level. And this is going to be a trend in industries where you have more people working in the junior level who are supervised by these people in the middle level and in the senior level. So AI is probably going to change a lot of things in industries where there are more people in the junior level. Now, if you're in the middle or the senior level, what can you do to your personal finance? First, I think that you should have an emergency reserve that will ensure that you have 3 years of monthly expenses ready and invested in a safe place. I know a lot of you want to make the highest returns all the time, but I think this security will give you enormous peace of mind in the event of you are being out of a job for a brief period of time. I mentioned my friend would leave a job, be out of a job for a period of time, and then again find a job equally good than the one he earlier did, or maybe even sometimes a little better. So it's not a hopeless situation, but the phase between jobs can be a restless situation, which makes you feel a little hopeless for brief periods of time. If you had the money ready to run your household during such phases, I think that will give you a lot of security. I think if you're in the middle or senior level, you must ensure that in your personal finance, you make the appropriate changes and first create an emergency reserve to the extent of 3 years of monthly expenses. Suppose you have some major expense coming up in the next 3 years, like your children's higher education or any other important expense. It could even be a marriage in the family. You should keep the money ready for that, and that money should be invested in a place where there is only moderate risk. Because in the event of some financial event happening, suppose there's a global financial crisis or a stock market crash, it should not be that you are in a situation where you planned with 100 rupees and the 100 rupees became 70 rupees and you suddenly have a shortfall of 30 rupees, which you need to bridge somehow and you don't have the means. So never put yourself in a situation where you create anxiety by being greedy at the wrong time or being over ambitious in the wrong place. So keeping money ready for imminent financial needs is something that will make your personal finance much better. It will reset how you view your financial responsibilities. The next thing you ought to do is look at your asset allocation. I know a lot of people in IT carry surplus assets in real estate. It could be that first flat which you bought when you started working, which you're still holding, but you're not going to ever go back to. In fact, your children are also not likely to find any use for that apartment because it is in a locality that you no longer want to live in. Now, these kind of assets, if sold in a bull market like this in property, can at least be easily liquidated and you will get a reasonable value. Focus on selling these surplus assets and converting them into financial asset. Keep them liquid. I'm not suggesting that you put all the money back into equity in one go, but keep that option of investing in equity over a period of time open and keep the money in a safe place from where you have multiple choices and multiple options. But if you're going to keep that money as an apartment which is in a place where you're never going to go to and which is not as fancy as it was when you bought it, then if there is a downturn in the economy, a downturn in the property market and a downturn in the stock market, you will find it difficult to sell that property even at the price that you will get now. You may be forced to sell it for 10-20% cheaper. Now, this is something that you need to avoid. Not only that, when you sell a surplus real estate asset and keep it as a stable, secure financial asset, it gives you a lot of comfort, confidence, and peace of mind. So, if you're faced with any crisis in your job, you will know that you've done these things and these things give you a lot of security. That security gives you confidence in your job, confidence to face a temporary change in your job profile, a loss of a job, or even a shift from one job to another. So, ensuring that the surplus asset is a financial asset and not an apartment or any other real estate asset is very, very important at this point in time. The most important thing is that you must reduce the risk in your equity portfolio. I know a lot of people hold only small cap and mid cap funds because they think that it's going to give them the highest returns. Well, it did give the highest returns. Today, if you look at the mid cap funds, the last 5-year average is about 30%. But I can tell you with a certain degree of confidence that the last 5 years and the next 5 years will be very different. So, if you have had such a good run, reduce the risk in your portfolio and change the asset allocation and keep some more money in safer places. Your equity should predominantly be in large cap mutual funds if you're a mutual fund investor, or in other dynamic asset allocation funds, or in a multi-asset fund. So choose to keep your money in a safer place. If you are invested in portfolio management schemes, make sure that you do have stable products alongside higher risk product. Don't keep only high risk products. Keep moderate risk products alongside high risk products so that in the event of job loss or any change in your professional role, you will know that your personal finance is already prepared for that. So keep your personal finance in a state of constant readiness. I think that will be giving you a lot of confidence to face any situation, and you will also demonstrate that confidence in seeking fresh opportunities, going back to another job, and ensuring that the setback is reversed quickly. So the financial preparedness gives you emotional stability, personal confidence, and professional strength. I think that is the thing that everyone should today create in their personal finance, And the reset in personal finance must ensure that you are ready for any situation. And if there is no situation, I'm happy for you. You can be happy for yourself, but you also know that you're always well set and fully prepared. That's what every investor should do now. And if you do that, life will be sorted, simpler, and you will sleep well. Thank you for watching this video.